is today the 772023. Very, very nice number today, 0707. Right. So let's look into some of the events that happened. Okay, I think the most important thing, few things is the FOMC meeting minutes. I think that would that's pretty important for us to know what's going to happen next. Okay, from the meeting minutes, it showed that almost all participants feel that it was appropriate and acceptable to maintain the target range at 5.25. So that was the reason why we saw them maintaining that number. However, on the subject of future rate hikes, right, almost all participants agree more is to come for rate hikes in the future. Now, this is very crucial because they're already showing and telling us very clearly, the rate hikes, there's no end yet. So the much talk about two more rate hikes, that's very, very much in play. So in the minutes also, you also addressed the issue on inflation, where it stated that participants also discussed several risk management considerations that could bear on future policy decisions. Almost all participants stated that with inflation still well above the committee's longer run goal and the labor market remaining tight, upside risk to the inflation outlook, or the possibility that persistently high inflation might cause inflation expectations to become unanchored, remain key factors shaping the policy outlook. So what's the key point right over here? They are looking, you see this, the inflation is still well above that 2% mark. And one of the key factors over here they're also looking at is the labor market. That shows that labor is remain very, very tight. So upside risk over here is one particular issue that we are looking at. So if you think this part, we say that, they agree more is to come. These are the factors that is actually saying that, there's these possibilities, more hikes is to come. So it also means very simple thing is that inflation remains unanchored. They can't hold it down, and inflation looks to be still going up and up and up. Not up in a way that it's flying, but the thing is that it's there for the time, and it's rather stubborn. In terms of coming down, it's pretty stable where it is. And sometimes from month to month, sometimes you see it actually goes up a bit before it comes down next month. Next month. So that shows inflation is rather sticky. And to reinforce the notion that a hike in July would be most likely unless we get data which shows inflation has dropped by a margin which is totally unexpected last month. Okay, so the previous month, unless we get, for next month or this month, if we get the CPI data of last month showing that a huge drop, really unexpected, unless we get that, I think July's rate hike is inevitable. We should probably be seeing a 25 basis point rate hike. So with the latest development, economists continue to forecast a recession, albeit a mild one this year or latest next year. So do expect this to come. And to top that, we have also seen that yield curve has really been, it's been a long time. I haven't seen a yield curve used in such a way, the negative yield curve in such a way, right? So Fed Chair Powell, however, does not think that the US will undergo a recession. So he has a very different thought with the high interest rate. And he thinks that economic growth will indeed slow, but not to a point of recession. So it's two very contrast things that we are seeing right over here. The economist thinks that we will see in recession, but the Fed says no. Okay, so in conclusion, regardless, whether we are going to see it or not, right? But we do see, I do see one thing that is the same, that we expect both views over here expect a recession. Okay, so a down move in the market, because if you say a recession, definitely the market is going to come down. So, but he thinks the economy will indeed slow. If you have a slow economy, also the market will come down. So regardless, whoever is right, the economist is right, or the Fed chair, Fed is right, both of them still see this coming in the market, this move coming in the market. So it's only the degree of drop which is going to be a different only. So if this is a recession, it's going to be a huge, it's going to be a bigger drop compared to economic slowdown. That's the difference what we see. Okay, that's what we gather from the minutes. Next is the ADP Non-Farm Employment shock, right? Yesterday, the ADP Non-Farm Employment change surprised the market, coming in at 497K versus a previous number of 267. Even I was pretty caught off guard with it. And I'm like, wow, okay, that's a big number. And yeah, it did create some uncertainty leading to tonight's non-farm. So these are really strong numbers coming from the private sector. Okay, ADP non-farm measures the private sector, the non-employment from the non-farm activities in private sector. So it's rather strong on a backdrop of this high interest rate environment. So with this number, it only made today's non-farm employment change data even more important than usual. Okay, because price action of the FX majors are showing that with pricing closing Thursday last night, Thursday, near the midpoint created by ADP non-farm employment volatility. Because when they close like that, later when it comes to the chart, you will see when it close like that, it shows, yeah, tonight's news is going to be relevant for those traders to decide the next movement of the market. Okay, so always ADP non-farm is the precursor. It gives you an idea, a rough idea, estimate, what's going to happen to the non-farm payroll numbers over here. And do remember, they still forecast an above 200K, which to me is still rather strong. So unless we have something lower than 200K, I think they're going to give more certainty that the Fed is going to continue to hike its rate. So if we have like a super number, something shocking as well, yeah, I won't be surprised the Fed will be even hiking at the either a higher rate or in having a higher view what the final rate, the final rate should be for the Fed. So these are some developments, and I think it's quite important for everybody to look into. So I think I won't dwell much until the non-farm payroll data is out, and probably we'll look into it on Monday. Okay, then by that time we will have a better view of the market, right? Okay, so let's look into